Every once in a great while, we get a tectonic shift that points us in a new direction. All we have to do is look to the three events that we've had simultaneously very recently: the pandemic, a rise in inflation like we haven't seen in a long time, and then, of course, the war. And I think any one of these events is very consequential in its own right, but I think more importantly, what they serve to do is reveal that things under the surface were already changing. And that's what we need to pay attention to as investors. There's no reset button. We can't get anchored to the past. We have to understand where we're headed. I'm paying attention to three themes. One is we're living in a multipolar world. Two is we're seeing a decline in globalization and a rethinking of security. And then finally, I'm thinking about a demographic reversal. So the commonality that I see across all three of those is that it looks to me like we're entering a period where inflation will be higher than it has been in the recent past. Recent events show that the world order is in flux. And the main event right now is that American dominance is being challenged by a rising power in China. There are other smaller players out there, important players like Russia and India. But what it means is that the world is a less stable place. War, although we've had it, doesn't necessarily have to be an inevitable, but we have to recognize that peace is maybe no longer such a sure thing. And as investors, we have to recognize that peace is an important foundation for investing. With peace no longer a sure thing, countries, investors, companies are going to think differently about security. And I think that broadly leads to deglobalization. And there are four categories that I would roll that into. One would be supply lines. We've heard a lot about this, especially during the pandemic, and it's come to the fore again with the war. But thinking about less about just going for the lowest source of production, but to where are my supplies safe, that I'm going to get a steady supply of that. So that's a different setup. We also have to think about energy. There is going to be reordering of where countries get secure sources of both carbon-based energy, but also an acceleration of the greenification of their current energy infrastructure. Lastly, I see a risk for financial markets to delink. And the reason for that is that we've seen a rise in the usage of economic sanctions. We saw that against China, and even more so against Russia, basically unplugging that country from the financial system. Those are big moves. And I think it seems expedient at a time politically, but the risk is that from the US perspective, having the dollar as the preeminent global reserve currency, there's a chance you put that at risk. And we look at past experience, when the British Empire and the sterling ceded the reserve currency, the prominent reserve currency, to the Americans. You look at it today, and that can happen, gradually, or it gets chipped away, and then all of a sudden it happens rapidly. And this comes at a time when China is looking for an opening to make the renminbi a prominent currency on the global stage. So we have to be careful, and we have to remember that the United States is a net debtor to the rest of the world. What I mean by demographic reversal is that we had a long period over the past 20 or 30 years where there was a massive increase in the working age population, mainly from China entering into or being plugged into the global financial. They added 800 million people, a massive increase in that working age population. Well, that's over, and working age population now is actually significantly declining in some countries. So we don't have that tailwind anymore. And I think this changes the dynamics. I think we're going to see more labor bargaining power, which could usher in a period where there's an upward force in wages that we haven't seen in a long, long time in developing economies. And I think we're seeing that right now, the tightness of the labor market we have. And then secondarily, we have to think about what effect that is on corporate earnings. corporations have had very fat margins. They're taking a big percentage of GDP as income. And that may be under challenge there. And it could potentially lead to a lot of CapEx spending to address that challenge that they face. So the bottom line here is that's another, I think, inflationary, trend there that could happen. As investors, I think, one, we should expect more volatility than we've experienced in the recent past, and two, to expect the unexpected on the geopolitical stage. Two is, I think that inflation is going to be running at a higher level than it has been in recent years, both in terms of wage inflation and price inflation. And that's important as investors. A lot of investors practicing today have never really seen that kind of environment. So you really have to pay attention there. And then lastly, when investing abroad, is understand that the world order is in flux. So the way you look at a particular country has to take into consideration much more than it has in the past about global security and those types of factors.